In the last 4 days, Bitcoin has dropped $10,000. Does that mean that the trend has changed and that we're on the brink of further corrections? That's what we're looking at in today's video, along with altcoins and the traditional markets. So if you find value, hit the like button, subscribe to the channel if you're new here. It's your home of macro cycle analysis. We're covering Bitcoin, cryptos, hitting the microphone, the stock markets, commodities, and the real estate cycle. Okay, diving straight into today's video as we had a close slightly underneath the 7-year resistance line. That's this white line at the top, going back, starting at 2017 to 2021, all the way to the current price action. Now, I'm looking at this as being another accumulation area for Bitcoin, even though it's closed back underneath that level. The S&P 500 has had a similar relationship with these sorts of resistance and support lines now for the last 16 years. And only recently has it hit the level, rejected, and closed above for multiple trading sessions. So although we could be on the brink of corrections, and I'll talk about those in just a second, I wanted to make it utterly clear that it doesn't mean that the trend has changed. I'll also explain when that trend changes to the downside. So we've got particular rules that we look at for that, and we are now measuring those because we've had an all-time high price with a significant also correction for the short term. So basically a possible local top here. So making that super clear, even though we've had some rejections, markets can climb back above these levels, and this is what could then bring on that major blow-off top move that people are anticipating. But before we get carried away, the downsides. Generally, markets come back to their 50% levels. They act like magnets. So it looks like we've got another appointment with the 50% level. This time it is at $111,400. You can see that number right here. That is the low to the high. So we've begun, well, Bitcoin's begun to fail here at 120. It's come back down to 117, 116. And in the last 24 hours, broke underneath, touching 114. So if we start to get another couple of days closes under this level, then it's highly likely that we come back to test 111. Should that fail, there's still plenty of support and longer term support. And that comes back to the June low. That's the major 50% that we're watching here, from the tariff low to the current all-time high. And that price comes out at $99,500. So for the short term, we're watching this particular figure. This will give us a leading indicator whether this cycle is beginning to change. Should the price of Bitcoin exceed $110,000 by the middle of September, looking at a date here of about the 14th, then it could be said that the downside has now overbalanced in time and price compared to any of the previous downsides. Now, it's not the end of the world. If that were to happen, then it could just be a longer, drawn out consolidation before another attempt higher, or the downside, we crack the 50%. So that's the problem that Bitcoin faces now. Should it go further than 110 by the 14th, then that's going to be the largest correction, which is the first early signs of a possible change in trend, but it also needs to break the 50% level here to confirm that change in trend. So as I said, it's not the end of the cycle by any means. Even if we get this correction, it needs to break other significant areas. But what I think is potentially happening here is what I'm calling here the final call stage, basically before we get any sort of move to higher prices, which would probably be met by top buyers and being in some sort of distribution range or channel over this period till the end of the cycle, whether that's in late 2025 or early 2026, we'll only know, or everyone will only know, in hindsight. Now, that's not the only reason why I think there's still further to go in this cycle, and we cover a lot of that in today's economic report. There's a link to this in the top of the video description, covering a lot to do with where investors are positioned. So if you want a copy of that, link in the top of the video description, that is coming out today. The USDT dominance is also looking still relatively stable, even though it's climbing higher. The area that I'd be concerned with is a break above 4.8%. That would really send things back to the crypto bears and less so for the crypto bulls, and of course more so for the stablecoin bulls. But for the time being, it's still just grinding around here like it's done in previous times. These are the previous all-time highs here and here. The stablecoin dominance had some consolidation and then climbed higher. So that's basically where people were taking profits, and then we see it start to grind lower again. So I'm still of that expectation that we will see further upside for the short term, and then another retest of at least 4% where these current lows come in, if not a test of the 3.7%. And of course, with the correction, the market is dropping its greed. It's still in greed, but it's dropped from yesterday from 60 down to 56, which I think is a very good thing for the sentiment to reset from these highs. And it's been a lot of stair-stepping to get to these highs thus far. So even though we've had some corrections here, 144 days, 77 days, then 31 days, we may see something like 2 weeks at this point before we start to get some higher prices. Each of these corrections have been getting shorter and shorter. So that's something that is going to be super important into the late stage of this cycle, as of course we're over 1,000 days now into this cycle. Similar to each of the previous cycles, in particular 2017, the corrections got shorter and shorter and shorter until it ran up into that final top. So if we're following something similar to what's happening in what happened in 2017 with the shorter and shorter corrections in time, not necessarily in price, but in time, then we could be on the brink of something like that now, where we start to see things run pretty hot. And it's, as I said, there's a good thing here that the sentiment is continuing to reset, even though it's remaining in greed. It's not getting too carried away with jumping into extreme greed all the time. You can see it on this chart here. It has a couple of minor days in extreme greed, and then basically likes to reset between fear and greed, and the lower end of greed is a good thing here. The other indicators suggesting we're getting a reset is the liquidations. We've seen $500 million in the last 24 hours. The longs got liquidated. Of course, Bitcoin dropped, so the majority of the markets have also fallen. Lots of longs liquidated. We've seen that previously, over $1 billion the other day on the 14th, and many other times where the longs were getting super hot, they get liquidated, takes a bit of time for some consolidation, and then the markets tend to creep higher. We also saw higher exchange volume. Again, good things for the market overall, but in the short term, that's coming back, which typically takes a harder hit on altcoins, because essentially at the end of the day, that's where the liquidity dries up from first, being that they are a highly high risk asset. Speaking of altcoins, Ethereum has also seen the hype dry up at the peak yet again. This is another fantastic chart. This one's from Crowded Market Report. The red are the commercial traders, the blue are the large speculators, yellow small. We're concerned with the blue and the red and what the commercials are doing. They typically call the market right. It's not that they call the bottom and the top price. They're just on with the trend, or they're in with the trend for the longest period of time. And the blues are usually on the opposite side. So they're basically losing every single time. And the line through the middle, that's the halfway point. And we're looking at where these guys are positioned. Are they positioned on the long side or the short side of the market, expecting it to go down? The reds, this is for Ethereum, are expecting the shorts. They're expecting the market to go down, Ethereum to go down. And they've been right. And they've been at their highest positioning for this, well, for Ethereum's entire history in this last week for the shorts on ETH. And that's what's happened to ETH so far. And so while they remain in a very heavy short position, it would seem unlikely that Ethereum is going to break to new all-time highs while this happens. Now, if you can see here, the chart is dynamic. It's changing. For one period, they're very, very short, and then they start to flip long. And that's what we've got to look out for next. You can see the blue here. This one here is very, very long. That was while Ethereum was going down, and then they got very short. That's while Ethereum was going up. So they got short through the period of the move higher. And then the large speculators got very long at the top again. So we want to be on the sides of the commercials, but there also needs to be a catalyst for this. And that's why we continue to follow the charts, looking at the TA, where these support resistance levels are coming in, along with the swing indicator. Now, talking of the overbalance in time and price for Bitcoin, should this continue lower, the target that we're watching is a low price of around 4,000, and that is by the 25th of August. So if this market happens to exceed 4,000 by the 25th or later, then that's going to be an overbalance of this particular range, which would mean that Ethereum needs longer to consolidate through this period. So although people are getting super hyped, super excited that ETH is going to reach 15,000, we've seen all those targets come out from Tom Lee and other Ethereum treasury company spokespeople. That happened towards the peak. You even had other funds buying back their Ethereum at the top, not to mention names, but they were buying it back here at 4,300. Current price again is at 4,300. It doesn't mean that they won't make profit later, but it was interesting that it was all happening at that high. So two areas again to watch: 4,000 and a breakdown of that level by 25th. If it's able to consolidate here, it's very strong. A breakdown that level tells you very quickly that it's probably going to need more time to consolidate, and that level could be anywhere from where the low comes in to the highs here at 47 to 46 to $4,700. So overall, things are still looking fine. It just needs time to cool off. And while we get the cool off, it seems the same thing is happening for ETH BTC, continuing to show that it needs more time here after getting rejected at 4%. And that was the 10-year resistance line that I've drawn on the chart, going back to the 2015 low, ETH versus BTC. The 50% level to the downside. So now we see that there is a rejection. Where could this fall to? The 50% in the short term is at 3.5% as I round up here. And that's the halfway point through the low into that high, so the last move. Now, if we fail there, obviously this range that you can see on the chart between 3 and 3.2, and the largest range would show us a support level somewhere around 2.8 to 2.9%. The reason I show that is that the market would still remain in the bullish structure, and it would just need more time to consolidate to come back to the highs. So it could fall that far, still remain in the bullish structure, while Bitcoin maybe goes on a run and Ethereum starts to give back some of those gains. That's as far as we would like to see it. Anywhere above that is going to look very, very strong for ETH. XRP down 25% from the high, now currently down about 15% from the high. So that's the largest range so far. There it is, 16. $2.60 is a good support level for XRP to fall back to through this period while it looks like it's trying to consolidate. But don't forget, we've been covering the time frame, the macro time frame here for XRP on the monthly chart, and how this is in its last months until its peak. Now, the saving grace is the macro bull market. It's only had one of these bull markets in the past. As we know from the previous cycle, the SEC got involved. It didn't have one of its big bull markets. This could be its time. And that bull market lasted from July 2014 to January 2018. So almost dead on 3.5 years. I've got my numbers right. The 3.5 year date would take us to Q4 of this year. So provided XRP consolidates here, especially above the $2.60 level, being the 50% of this range, then it has the potential to get to its final leg into these highs, whether that's $4, $5, $6, who knows yet, but it needs to consolidate above these highs. Otherwise, it could be slipping back into each of its previous time cycles. It's basically done 12 to 13 months through its entire history, from a low to a high or a high to a low. In the case of a high to a low, it's done multiples of that. You can see here 26 months from the high to the low. So that's just over 2 years from that period. We're concerned with the upside because there hasn't been a breakdown. Upsides, let's see if we can run this thing into late Q4. Those price targets that we've been covering on the channel, pay attention if you are new here. The upside, looking at the mid 130s, that's the first price target there based on fibs that the market has provided us, basically looking at where those levels have come in the past and fib points that it has respected in the past. It's 200, 300, 600% levels that has done in the past. Each of these tops have come in at one of those fibs from the previous cycle. So that's the 200%. The next levels on the extensions came in the 160s, and then we've got a couple of levels high above that you can read here, but let's focus on those first targets and see where they come in terms of the time towards the end of the cycle. So if we start to run to these prices with time running out, then that might be all that the market is willing to give, even though you've got everyone else calling for $300, $400, $500,000 Bitcoin. The market will ultimately decide where that end price is. The interest rate seems to be one of the largest narratives that are affecting the markets at this point. Bitcoin, crypto aren't excluded from this. And in terms of the stock markets, they may be front running a possibility of a rate cut. However, that rate cut likelihood is getting less and less by the day, at least for this period. This was at 0% a couple of weeks ago. There was a zero chance that the Fed was going to pause interest rates at 4.5%. Now, a couple of weeks later, with only 29.5 days to go until the meeting, we're at up to 16%. And only yesterday, it was sitting around 14, 15%. So this thing is climbing bit by bit each day. You can see it just down below here. It was at 14.6. Today, 16.4, meaning that more of the market is expecting a pause on the rates again after so many meetings that their interest rates haven't been cut. It seems like the market is expecting a rate cut. However, if we don't see that rate cut, that could be a shock. And those dates tend to line up with the dates that we're watching for Bitcoin and Ethereum and the stock markets towards this middle of September timeframe. So either way, it could just be another blimp in the radar for the overall cycle for the stock markets and Bitcoin. But moving forward, I think the market will get out of that and run into this final peak. Now, the stock markets can break out of this 16-year range. 2007 top, 2009 low, projected all the way out into the future, and it's still bouncing around these lines. A breakout here could send things a little bit wild into the end of the cycle, which of course is going to help out Bitcoin running into new fresh highs and possibly and finally altcoins to go on their merry way. We're also seeing the home builders ETF playing a lagging game here, but a bit of a catch up. And it has continued to run higher since that April low. And generally, you'll need to see these two things happen together. The S&P 500 going up, but more importantly, the home builders ETF going up. And that's going to give you that risk on environment. While the home builders ETF goes down, things basically grind to a halt overall. And especially if this starts to really underperform and head lower, that's giving you warning signs that the cycle is over, and it's only a matter of time until the final bell rings. Not that anyone's going to hear it, but that's basically what has happened each of the prior cycles. Looking at the home builders ETF or home builders within the home builders ETF start to tell you that there are some weaker things happening in the economy, and that's makes up our theory with the 18-year cycle. We're watching this thing run into the top. We're getting a little closer to the top now, running into this peak here. Still not at that top yet. Therefore, I think there's still further to go with your Bitcoins and cryptocurrencies. It sounds like a broken record that there's more time to go. We haven't seen the breakdowns yet. And that's why it sounds like a broken record. We're on red alert for these, but in the meantime, we have to keep following the trends to the upside. And if the risk on environment is still there in the markets, well, then you ought to keep taking it, especially Bitcoin and your altcoins if that's what you choose to be trading. Maybe we'll see another bell ring, another canary in the coal mine pop up, especially with the yields as they continue to climb, even though the expectation from the market was that we would see a rate cut. 10 years are up, 30-year yields are up, 2 years are also up, even though they're under the 4.5%, they're up to 3.76. And of course, the bonds have actually fallen yet again. So basically topping out there at around 116. So further to go, that's the story here. Even if we see a short-term correction for Bitcoin back to these $111,000 levels after some consolidation, the key price to watch and time is this 14th of September at around $110,000, because that would give us an overbalance of the previous move, and then we got to watch what happens from that point. That's where things get a little bit more concerning there for Bitcoin. Haven't passed it yet? Hit the like, subscribe to the channel, continue following the journey here. And don't forget the free reports are out today and another 2 more this week. Thanks again, guys. See you at the next one. Take care and peace out.